Hello friend, welcome back to my YouTube channel. In this video I want to tell you about Enron, the biggest fraud in history case. The Enron case is one of the most infamous corporate scandals in history. Enron Corporation was an American energy, commodities, and services company based in Houston, Texas. In the late 1990s and early 2000s, Enron was considered one of the most innovative and successful companies, and it ranked as the 7th largest corporation in the United States. However, behind the scenes, Enron was engaging in fraudulent activities and manipulating its financial statements to create an illusion of profitability and financial stability. The company used accounting loopholes and special purpose entities, SPEC, to hide its debt and inflate its profits. Enron's downfall began to unfold in October 2001 when it reported a significant quarterly loss of $618 million. This loss raised suspicions among investors and triggered an investigation into the company's accounting practices. It was discovered that Enron had been hiding its debt in off-balance sheet entities and engaging in deceptive accounting methods. One of the key figures in the Enron scandal was the company's chief financial officer, CFO, Andrew Fastow. He had created several complex SPECs, including one called LJM, which he used to manipulate Enron's financial statements. Fastow, along with other Enron executives, profited personally from these SPECs at the expense of Enron's shareholders. Enron's fraudulent practices extended beyond its accounting. The company also engaged in market manipulation, creating artificial shortages of electricity in California to drive up prices and maximize profits. This led to rolling blackouts and caused significant harm to the state's economy. As the extent of Enron's deception became apparent, investor confidence plummeted, and the company's stock price collapsed. In December 2001, Enron filed for bankruptcy, resulting in the largest corporate bankruptcy in U.S. history at that time. The fallout from the Enron scandal was immense. Thousands of Enron employees lost their jobs and retirement savings. Investors lost billions of dollars, and many pension funds and mutual funds suffered significant losses due to their investments in Enron. The scandal also led to the dissolution of the accounting firm Arthur Andersen, which had been Enron's auditor. In 2001, Enron's unethical practices and the fragility of its financial structure were exposed. As investors and analysts began to question the company's operations and financial reports, its stock price plummeted, and creditors and investors grew concerned. Ultimately, Enron filed for bankruptcy in December 2001, with debts totaling billions of dollars. The Enron scandal had far-reaching consequences. Thousands of employees lost their jobs and pensions, and shareholders suffered enormous financial losses. The scandal led to the dissolution of Arthur Andersen and prompted significant reforms in corporate governance, accounting regulations, and auditing practices. The event also undermined public trust in the financial system and highlighted the need for stricter oversight and transparency in corporate affairs. The Enron case had a profound impact on corporate governance and regulatory practices. It exposed weaknesses in accounting standards and oversight mechanisms and led to the passage of the Sarbanes-Oxley Act in 2002. This legislation aimed to enhance financial reporting requirements, increase corporate transparency, and strengthen corporate governance. In the aftermath of the scandal, several Enron executives, including CEO Jeffrey Skilling and CFO Andrew Fastow, were prosecuted and convicted for their roles in the fraud. Skilling was found guilty on multiple counts of securities fraud, insider trading, and conspiracy and received a prison sentence of 24 years. Fastow cooperated with investigators and received a reduced sentence of 6 years. The Enron case remains a cautionary tale of corporate greed, accounting manipulation, and the devastating consequences of unethical business practices. It serves as a reminder of the importance of transparency, integrity, and effective regulatory oversight in corporate governance. Enron serves as a cautionary tale about the dangers of unethical behavior, lax regulation, and the potential for corporate fraud. It revealed how a company, once considered a symbol of success and innovation, could manipulate its financial statements to create a facade of prosperity while concealing its true financial health. The Enron scandal emphasized the importance of ethical conduct, corporate accountability, and the need for robust regulatory measures to safeguard the interests of investors, employees, and the public. For more such interesting stories based on financial frauds, subscribe the channel to watch and get information related to them. Share the video as much as possible. Thank you for watching.